Hey traders, Raghee here. And in this video, let's cover a couple things about directional bias and why, once again, during the morning session, I was focused on the long side. And the directional bias for day trading actually comes from a time frame. Look, I'm trading 1 minute time frames when I'm day trading, but my directional bias is actually coming from the daily time frame. And so, yes, the daily is going to tell me what direction I'm going to trade a 1 minute chart in, or the direction I would prefer to be in. And that's this bias, directional bias, that I'm referring to. The directional bias is typically going to be part of the overall trend. So here we have a double green uptrend, plenty of green grab candles on the daily. And most importantly, when I take a look at the volume weighted average price and I look at two anchored, so it's actually an anchored VWAP, both of them are telling me stick to the long side. Not that every day is going to be long, but the probability of sticking to the long side day in and day out. And we've had this bullish directional bias call since November 3. Now imagine if all you did was look for longs between now and November 3, whether that be the daily time frame or that 1 minute. How high would the probabilities for your trade be? And that's what I'm talking about, gang. Don't fight the path of least resistance. Run down that path of least resistance. All right, with that being said, it was really easy focusing on the first 120 minutes of the morning. So we're talking about from basically 9:30 to 11:30. That's the window of my day trading. We don't end up over trading. We don't end up looking for continuation into the doldrums. We don't look for continuation into the second half of the day. This is the AM session. I look at AM day trading, 9:30, 11:30, and I cancel my unfilled, my pending orders at 11:30, right? And then we just go to managing trades. Today, managing trades came down to that all-important break even. We had 4 setups in total we were looking for: RTY, YM, NQ, and CL. Of the triggers, so I always have a trigger price. Of the triggers that are part of the alerts that I send out, the RTY triggered, the YM triggered, the NQ did not. We missed the CL by 4 ticks. Pretty bummed about that, but that's okay. So of the 4 potential trades, this would be considered our setups, right? So of our setups, 3 of them actually triggered an entry. Actually, we got in. All right, so that's our day trading. By 11:30, all of these hit their T1s. We had a T1 level waiting, and all of them hit their T1. Now, here's the important part that I really need you guys to think about. When you're hitting your first target, are you putting your first target way out in the stratosphere? Meaning, is your first target entirely too ambitious? Ambitious profit targets kill most day traders' results. Not that they aren't entering properly. Sometimes they're just not putting profit targets where they really should be, which is much more prudently than some traders would expect it to be. But if I can go ahead and scale out and move to a break even, that's always sort of the formula. Those 2 steps. 1, pay myself. 2, move to a break even. Then by 11:30, gang, I've paid myself, I've covered myself, and then the all-important box that we want to check. Is there more capital? Is there more in our account at 11:30 Eastern than there was at 9:30? If I can put a check in that box, I'm a happy camper. We did that on Monday. We did that today on Tuesday. We're looking to do it again. On Wednesday, we'll see what the market brings. But keep these concepts in mind. Hope it helps, and I'll see you in the next update.